What's up, Friday? Hope everybody's having a great day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. First of all, thank you guys for all of us that joined us yesterday on the Trader Summit. It was an amazing time. We had a really good time. There was a couple of hundred of our closest friends there. I hope that you all had a chance to join us and see what it is that we do. What we're going to do here is what we do each and every day. We identify potential breakout trades and reversals from an educational perspective. And we remember this, and this is something I always talk about. We leave the lines on the charts, and we leave the lines on the chart so that you can see what happens with our positions over time, because that I think is very key. Now, if you guys are new to the channel, make sure that you hit the subscribe button, the notification bell, so you get the alerts and the updates. If you're a regular viewer, I'd appreciate if you just give a little quick thumbs up. Those help a lot. The computers know that you're there and that you're around. And then let's do this thing. Let's go ahead and get rolling. So, starting with our S&P this morning, it is up about 7 points. We did drop yesterday out of the supply level we had talked about, but not much. It fell a little bit out of there, and then kind of rallied up throughout the day. You know, for those of you guys that were in the summit yesterday, Corey talked about that he saw some bullish divergence down here after we got our first move away, and so he actually went long on the Russell inside of that room. And so, the next thing we look at, technically my 4 hours giving me some lower swing lows and lower swing highs. This could be the lower swing high for price to continue to move lower. So this is today's what I call an inflection point. It's an inflection point where our daily trend is definitely up. Our 4-hour trend is down, but it's not a super strong down. And a matter of fact, our daily chart gave us a really, really strong reversal hammer candle yesterday, right? Maybe dragonfly doji, I guess is the better term for that. But we got a long lower tail there, which is typically a bullish signal, right? When you get those long lower tails, it's typically a bullish signal for price to come back up. So, overall, I'm still net bullish. For an intraday opportunity, I'm kind of okay right now, looking at either one of these potential breakouts. Now, I will say this. The breakout to the upside is a higher probability breakout, okay? The breakout to the upside is the higher probability breakout. And because we've got support, resistance, we've hit it twice, you could theoretically take the breakout one way or the other. Both breakouts will need tight basing to the area. I think there's a chance, frankly, we just stay in between these levels pretty much all day. If we stay in between these levels pretty much all day, I don't know that it makes sense to try to trade this. By the way, I'm not sure that we're going to stay in between those levels all day, but I don't know that it makes sense to try to trade in between those zones. I would look and wait for a potential breakout. Now, if you get a breakout on this one, understand that I think the breakdown to the downside, you've got a little bit more demand to contend with. Breakout to the upside, I think you've actually got better room to roam. You do have a supply area up here at 3506 on that 15-minute chart for us to pay attention to. So Jasmine says, Jasmine says, sorry, I'm new. May I ask, what is the relationship between the Russell, the S&P, and the NASDAQ? So great question. They're all of these are our equity index markets, but the thing to consider when looking at these three markets is what are the stocks that make up those markets? And if I know the stocks that make up the markets, then it tells me a little bit more to the relationship. So the Russell is small cap stocks, right? Small cap stocks. There's really no overlap in what's in the Russell versus the NASDAQ and the S&P. The NASDAQ are 100 large cap companies that are primarily tech focused, very heavily weighted towards the top 5, which is Facebook, Apple, Amazon, Netflix, and Google. The S&P is similar in form to the NASDAQ, except that the S&P is not as heavily weighted towards simply those 5 companies, still large cap organizations. So when I say what's the market doing today, I look at the S&P. The S&P is my picture of what is the market doing today. When I'm wondering, what's the market going to do in the future, I look at the NASDAQ and the Russell because they're typically going to be my leaders. And so the relationship between them is that the Russell and the NASDAQ will oftentimes lead the S&P, although the NASDAQ and the S&P are going to run a lot closer together. All right, so looking at the NASDAQ. Hey, Nick, good to have you. And Tom, thanks for the comments on the summit. Yeah, we'll probably do the next one early next year. Would probably be my best bet would be very early next year. And if you guys want to give me guests that you'd like to see, please let me know. And we will try to bring in some guests. That's part of the reason we got some of the guests yesterday, because they were requests. All right, so yesterday's little 15-minute NASDAQ level, that worked out pretty well. Came back to our target area for a nice little move away. Don't worry, Nick, we'll make it online. Although Nick, if you can find a reason for me to come speak in the UK, you find a group that needs a speaker that's willing to fly me out, I'll come to the UK and speak anytime. All right. Well, Dennis. I am glad Dwight was able to grace us with his presence. It was nice of him to grace us with his presence and I guess I would use the word, his magnanimousness. Maybe even magnanimosity. Is that a word? Magnanimosity? So when I look at the NQ, we've got a 15-minute level of supply here, but we've come close to it once, moved away. We've come kind of close to it again. We're just not quite there. So what I'm going to do is remove that level. And I'm going to remove that level, although we didn't have that level in the first place. And I'm going to put a potential breakout area here as well. Okay. Yes, Pia, it was recorded. It will be on the Traders Army website underneath the free trading videos section. It just may take a day or two to get it up because we have to edit that one. It takes some time. It's a bigger file. So look for a breakout above this 11,960 area, provided that we get quality basing in this region. We still have this area up here to contend with, this 1220 as kind of the next one. If you don't like this one, then this one is actually a bit better. I would keep an eye on both of those for potential breakouts. In the case of a reversal trade, none of these areas are very clean. I mean, I don't know about you guys, but I just don't see a lot of clean areas for reversal trades. I think that we could see a bit of a sideways market with settling out with what's going to happen with the stimulus, that there was some more hope of a stimulus coming through. There was the news around the Biden campaign. There was news around President Trump. I mean, there's always some sort of news. Is it possible that the market could chop a little sideways today before we see a gap on Sunday? And that's the other thing to consider, is the market, I could see us chopping a little bit sideways before potentially gapping up on Sunday. Or gapping down, gap one way or the other. So now the Russell, I was just going to say that, Dennis, that the Russell does have some better demand levels formed than the other two markets. When we look here at the 15-minute chart, you've got this area here, which is a rally-based rally above a pivot low. Right there, 1607 by 1603. Andrew, it's a little bit of a factor, but not all that much of a factor, especially now since we have weeklies. Every Friday is an options expiration day now that we have weeklies, right? Trent, that the momentum that Corey referenced yesterday was this right here. He was looking at this area, at this right here, and it was this bullish momentum here with those there. That was what he referenced yesterday when he talked about the bullish divergence in the Russell, which is why he went long on that area. Now, looking at our levels for today, you've got this level down here, 1603 by 1607, which is pretty clean. 1620, which was formed around lunchtime, with this big move up. It's a drop-based rally. The only thing I have concern-wise about this 1620 level is that you've got a little wick over wick here that may actually cause basing in front of the zone. I don't know that this unbalanced wick over wick is going to be enough to give us our true turn, but it might be enough to give us basing in front of the zone, thus making the zone a little bit less probable. And then looking at this on the 1 hour time period, this would be our potential breakout area up above here. Yeah, Dennis, I agree that the lower level is a better level and it is a better zone. All right, so those are our equity markets for today. I guess we could take a real quick look at this one. Hold on 1 second. Okay, so looking at the Dow, we are sitting actually just below the potential breakout point above here. This is the breakdown point that we had earlier in the week, and now it can potentially be a breakout back to the upside. That means that this becomes a line of control if we get the basing. On an hourly chart, not a lot of reversal points. On a 15, this is very wicky, right? This is very wicky. And so I'm going to leave that alone. I'm not a huge fan of it. Now, I will say that all of these markets on the daily chart have given us that very strong reversal candlestick pattern, which typically, I mean, sometimes when you get a candlestick pattern like this, that's the result, right? Not always, but a lot of times those long lower wicks will become strong buying catalysts for the next leg up. I've gone on record as saying that I think that there's a chance, and a pretty darn good one, that we will make it to all-time highs before the election. What happens after the election? Sorry, don't have that crystal ball, and I'm not gonna play that game here. But I do see that I think there's a chance that we could go to all-time highs before the election. And on a daily chart, this was just a nice little pullback for our next leg up. My target was 12,574 on the NASDAQ. All right, so let me take this back to just reset these to the 1 hour, and then I'll share this grid. Okay. Next, let's go to commodities. So moving over to our commodity charts. All right. You know what, Ken? That would have been a good idea if I picked up a good crystal ball on Prime Day. I might have, had I known that they were going to have a crystal ball on Prime Day, I would have bought it. But I didn't know ahead of time they were going to have one, which is why I should have bought it, so that the next time they have one, I can buy one. Wrap your mind around that logic. All right. Chin says, Mr. Chuck, so you use MACD major for checking divergence. Am I correct? May I ask another question, please? Trade the spiders. Should I check the ES? Yes, if you're going to trade the spiders, it's good to check the ES. The reason it's good to check the ES if you're going to trade the spiders is because you will see overnight areas of supply and demand that are formed in the ES that will be why the spiders turn directions. Okay? That'll be why the spider changes directions, because of the overnight levels that are formed in the ES. All right, crude oil. We had identified a supply level in crude oil yesterday, and that son of a gun just rallied right through it, right through that level. When I look at this, I don't see really another reason to try to take another reversal trade on here. You got a potential breakout trade at this level up here. But it's 2 days in a row now that we've sliced right through some of these smaller time frame levels. Technically, you've got some areas of demand down here, but my concern with all of the whipsawing that we're getting is that we will whip right through them, just like we've whipped right through these right here and right here, whipped right through some demand that we had, and then right back up through some supply. And so I'm wondering if right now we're just so range bound that it makes sense to only play the extremes, right? Only playing the extremes of the range, which takes us all the way down to here on the hourly chart. Well, in that case, you've got a level that's 39.75 by 39.21. It's a fairly wide zone for a lot of traders. And so while I think it's okay, I would actually look candle to candle down here, depending on the size that you want to take it. Yeah, that demand, exactly, Liz. It's in the middle of nowhere, and we've been kind of cutting through those ranges. So I'm going to stick to the extremes of that range. Scott, good morning, my friend. Good to have you, brother. Let's see. Andrew says the zigzag on the trade station shows a lower high, but not a lower low. Are you talking about on which market? Are you referring to that on, Andrew? On the spiders or the NASDAQ? Pull it up here. On the ES? When I use the zigzag, I've got a lower high and a lower low based on the zigzag. Now, mine's set at 0.5%. So it's not 5%. The default of this, I think, is 8%. But mine is set at 0.5%. All right. Next, gold. So in our gold position, yesterday we looked at a 2-day iron condor in gold. And our 2-day iron condor in gold should be working out. So it has expiration today. That 2-day iron condor in gold would have an expiration today. As we rallied up yesterday, be aware, though, that if we get too much basing in front of here, did anybody get into that 2-day iron condor yesterday in gold? Anybody get into that position? If you did, you probably have some profit built in, although maybe not a ton. And we looked at the 1935, or even I think it was 1935 as our upper level. If we get basing inside of this region here, you're going to want to close that trade out. Okay? You won't get full profit. You're going to want to close that trade out if we get basing. And the reason for that is because if we get basing in here, this son of a gun could easily pop up to this region. And on Friday, that's exactly what we saw happen a couple of Fridays ago when we were sitting with one of these on a Friday afternoon and the market popped up right to the short strike. So just keep that in mind. Be aware of it. You may want to close that out. From a directional perspective, we are coming up to a 15-minute confirmation short right now, but this is the third time we've come up to it, and I don't quite have a 1-to-1 reward, 2-to-1 reward to risk, so I don't really like it. I do think this is a pretty clean little level right here if price comes back down. Now, why do I think this is a pretty clean little zone? I think it is because I see a lot of pivoting around this area, and it's an unbalanced wick over wick before a nice move up. Now, we came close to it, which gives you the thought that, we may want to make it a confirmation entry since we did come close to it. But I think that this one actually may hold pretty well. All right. Nat gas. Move all my charts on this one. I think I just need to go back to charting on the regular NG since we've definitely rolled over. I'm going to delete some lines, though, on here since we've done the definite rollover. So overall, looking at this NG, on a 1-hour chart, I've got a level up in here of supply, but not the cleanest of levels because it's a retest of all this area over here to the left. What I'm going to do is look down here at demand. Other than that, I don't really want to test any of these supply areas. When I go to the 4-hour, my 4-hour trend is definitely still up. 15-minute chart. Maybe the origin of this move on a 15-minute. If we come back and retest that area, which I don't know that we will, although it is turning into a bit of a speed candle. All right, copper. Yesterday we were in between levels in copper. Guess what? We're still in between levels in copper. We would look for basing above this region here as an opportunity to get long if price pops above that area. But we're not anywhere near it at the moment. And then our best demand level is this one down here. On a 1 hour time period, you do have this move up right here. But the problem, I think the problem with this is that this is a retest of this area over here to the left, which we stayed in there quite a while. Soy, we looked at soy yesterday. The supply level that we had found from Wednesday's daily market commentary worked out really well. And we didn't add anything yesterday to our soy chart. We did come up, we have in the overnight come up to this little area of supply here. So once this market is really rolling this morning, look for basing in here since we've pulled away from that supply. We could also see at this wick over wick area here a bit of reversal. Corn broke out above our breakout line. We didn't get the cleanest of basing directly in front of the level, so you probably didn't jump in on this one, but we definitely got our breakout line here in corn. I'm going to remove this line, and the next thing that we would look for is a pullback to a quality area of demand. On a 15-minute, there's just nothing pretty. On the hourly, it would be this wick over wick at the breakout point. All right, let me share this grid. Any questions on commodities before we move off of commodities? We'll go take a look at currencies. I will tell you, I did not even look at my currency chart yesterday. Between Corey and I talking, we ran out of time. So the lines that are on these currency charts are not yesterday's lines because I didn't even look at currencies yesterday. We were in the trade room all day, and so I didn't even look at them. So I'm going to start with that as my disclaimer. So starting with the ZN, which is on our 4-hour chart, our ZN, we did have that bit of a rally. Glad we took that supply off the other day. Put in a little bit of a tweezer top over here, right there. Got a bit of a tweezer top yesterday morning and sold off after that tweezer top. Well, when I see a tweezer top, that automatically becomes a supply area. Okay, so we're going to look at that as a potential reversal point if price comes back into that region. Now, our big picture trend still up, so that would have to be a confirmation area of supply. In the Aussie, we really came down pretty hard yesterday in the Australian dollar. Big move down here. We got there, chopped a little bit sideways, and then sold off. So it actually became a really decent breakdown opportunity for those of you that took the breakdown short. We came back into this secondary level and rallied up off of this zone, but it's setting up for yet another breakdown level. So if I go to the 4-hour chart, it's easier to see it on the 4-hour, definitely easier to see the trend, but you can also see the little bit of the bull flag that's forming here on this move, or excuse me, bear flag that's forming on this move down. So we would look for the next leg down, and the next leg down would be, we could probably say right about here. You can look for basing somewhere around this area here. This line is not exact because we might base a little higher, we might actually base a little lower. So this one's it's kind of a messy breakdown, but it is setting up for a potential breakdown below that region. A cleaner area is the reversal back up to here. Okay, that's a much cleaner area, is the reversal back up to here. The euro, we saw the same thing happen kind of in the euro 15-minute chart. We saw that we came into our 15-minute level, although if you took the trade, 6-candle rule probably had you out pretty quickly, close to break even. Maybe you made a little profit on there. 4-hour trend is still technically down, although we've seen a little bit of momentum here in the last 4 hours, coming into a supply area right now. So the supply area that we're coming into right now would be this area right here. Now, what we're also getting is we're getting upper wicks that are pushing up into here, and we're seeing those upper wicks. So even though those candles are green, those upper wicks tell me that it's bearish price action. So I'm not afraid of this level here for a potential reversal since our big picture trend is still down. Canadian dollar. Canadian dollar came right down in and went right down through that level that we had talked about the other day. Once again, didn't look at this yesterday at all to talk about that. When I look at the 4-hour on the Canadian dollar, we have definitely seen weakness in that uptrend. This is definitely a lower, could be setting in our first lower high for price to go lower. It's not there as of yet. So I would look to the origin of this drop as our next reversal point. All right, the Great British Pound on our 15-minute chart. We came into the level, right? 1, 2, 3, 4, 5, 6 candles later, it actually did look like it was going our way. And then it said psych, and it came hammering right back down. So gave us an opportunity to take a little profit or at least get out, fairly quickly. And now on the 4-hour, we're sitting somewhat sideways. So in this area, sitting somewhat sideways, I think you're best waiting for a potential on the breakdown if we get, once again, the quality basing. And then our last market is the Japanese yen. We bounced off of this little area of demand, got a little bit of a run from that region. But on the 4-hour, what's that Japanese yen telling me to do, right? If I think about what that yen is really telling me, it's telling me to do nothing, okay? It's telling me to do nothing and just walk away from that trade. And so I think that's what we're going to do. We're not going to add anything new to the yen today. So that's all I have for today, guys. I hope that you enjoyed our session. If you guys do me a favor, if you haven't done it already, hit that like button. Make sure that you hit the subscribe button so you get the alerts every time that we do go live. Please join us every day, 7 o'clock. I thank you for joining me today. Remember, if you're going to hold something over the weekend, hedge it, protect it. Traders Army members, I will see you Sunday night for the live trade room. Until then, everybody, have a great night. See ya.